Welcome to The Explainer. Today, we're putting on our detective hats to investigate the very curious case of BYND Meat's stock. I mean, the price has basically fallen off a cliff, but at the same time, there's been this explosion in trading activity. That suggests there's way more to this story than meets the eye. So, let's start with the central piece of evidence, the price itself. As we're looking at this, it's trading at just under 65 cents, and that's hovering really close to its 52-week low. Now, on its own, that pretty much screams trouble. And this right here is the core mystery we're trying to solve. We've got this massive, totally unusual surge in trading on a stock that, by just about every other measure, looks like it's collapsing. So the big question is, why is so much attention suddenly focused right here? All right, let's start digging for clues. Okay, so before we can even begin to analyze this recent surge, we have to understand the bigger picture of this stock's journey. We've got to establish the scene of the crime, so to speak. And wow, this chart just perfectly illustrates the sheer scale of the drop. The 52-week high was $6.70. The current price? It's just a tiny sliver of that. In fact, it's sitting at only 2.35% of its entire yearly range. That is an absolutely staggering decline. So the first question is this just some random dip, or is it part of a powerful, really well-established trend? Well, lucky for us, technical scores can give us our first major clue about the underlying forces at play here. And the evidence is pretty compelling. The analysis gives this downtrend a high trend strength score and a trend quality index that's soaring over 171. Now, you don't need to know the exact math behind that, just know that these scores confirm this is not a random little dip. This is a powerful, well-established, downward superhighway. So let's move on and see how this story builds by, well, following the money. An explosion in trading volume, just like the one we're seeing, can tell us a whole lot about the conviction behind a move. The relative volume is over 18. Now, to put that into perspective for you, that means trading activity is more than 18 times its normal daily average. This is an absolutely exceptional level of interest. But the real question is it buying or is it selling? Okay, now what's really interesting about this slide is the story it tells. You see, while the money flow index looks kind of neutral, the OBV and the accumulation/distribution lines, well, they're like giant blinking red lights. Their deeply negative values point to significant sustained selling. This isn't accumulation, where the big players are quietly buying up shares. No, this is distribution, which means they are consistently selling off their positions. With the money trail pointing so definitively downwards, let's zoom in and start examining the more detailed technical fingerprints. These indicators are going to give us even more clues about the momentum and the overall condition of this trend. Right off the bat, you can see the stock is trading far below all of its key moving averages. I mean, just look at the 200-day average at over $3. It's miles away from the current price. So the crucial point here is that this isn't just a recent dip. This confirms a strong bearish trend across all timeframes, from the short term all the way out to the very long term. All right, 3 key indicators are going to help us build out the rest of our case here. We've got the MACD, which tells us about momentum, the RSI, which will indicate if the stock is overstretched, and the ADX, which confirms the strength of the trend itself. So first up is the MACD indicator, and it is deep in negative territory at negative 0.502. What this tells us is that downward momentum isn't just present, it is firmly in control of this stock's direction right now. No question about it. Next up, we're going to look at the RSI, which measures if a stock is oversold or overbought. The best way to think about it is like a stretched elastic band. When it gets stretched too far in one direction, it has a natural tendency to want to snap back. And look at this, BYND Meat's RSI is sitting at 24.47. That's well below the 30 level that typically signals an oversold condition. So that elastic band we were talking about, it is stretched very tight to the downside. This is the big twist in our investigation. The potential for a snapback is definitely building. And this is a critical clue that really complicates things. The ADX, which measures trend strength, is high. That confirms this powerful trend isn't weakening at all. And another indicator, the -DI, which specifically measures downward selling pressure, well, it's at a massive 48. It is completely overwhelming any buying pressure. So even though the stock is super oversold, that downward force remains incredibly powerful. Okay, so now that we've gathered all the evidence, we have a powerful downtrend, massive selling volume, and this deeply oversold condition, let's look at the key price levels that could determine what happens next. This slide really lays out the two primary scenarios, kind of like a fork in the road. For any bullish hopes to even begin to materialize, the price has to decisively break above that resistance level of 75 cents. But if it falls below that key support level around 55 cents, that powerful bearish trend is very likely to just continue its march downwards. So after examining all the evidence from every single angle, what is the final verdict on the state of BYND stock? What does our investigation ultimately conclude? Well, the conclusion is pretty clear. The stock is in a powerful, confirmed downtrend, and it's being driven by incredibly heavy selling pressure. But there is a significant twist. That deeply oversold condition introduces the possibility of a sharp, short-term bounce. This conflict between the strong trend on one side and the oversold state on the other creates a situation of extreme volatility and, honestly, unpredictability. And that brings us to the final takeaway from the analysis, which is really a warning of extreme caution. While that snapback bounce could certainly happen, anyone betting on it would be fighting against a very, very strong and established bearish tide. And you have to remember, the primary trend is almost always the most powerful force here. So this leaves us with the ultimate question. Is Beyond Meat a falling knife that you just shouldn't dare try to catch? Or is it a coiled spring, wound so incredibly tight by all the sellers that it's actually ready for an explosive move up? The technicals have laid out the whole case for us, presenting both the overwhelming bearish evidence and that one tantalizing bullish twist. The next move, well, that's up to the market.